Hi, this is the DA for ADMS 2510, Managerial Accounting. And if you guys have taken financial accounting before, it's going to be a bit different from that because managerial accounting is mostly used for internal purposes. These financial statements are never issued to the public, and they mostly deal with the cost of a company in producing a product or in terms of overhead, their expenses. It doesn't deal with their financial performance, their net income, or their revenues. So before we start, I would just like to stress that the book for this course that you're using, it's pretty well written. I would suggest you to read it. The logic and the concepts would make a lot of sense and they'll be really helpful when you're doing the exercises. So do read the chapter first before doing the problems. Secondly, it's not a pretty hard course. There's just some key components which are carried forward from each chapter. And that's what we're going to take a look at in chapter 1 and 2. Chapter 1 is just theory. I'm not going to go into that. It's just a bit of business information and why you study managerial accounting. You can give that a read yourself. We're going to start with chapter 2. So right off the bat, chapter 2, there's two types of costs. In any manufacturing operation around the world, they usually classify the cost in manufacturing or non-manufacturing. Pretty basic, a general division of cost. But even more specifically, in manufacturing, there can only be three types of costs. No matter what business you take a look at, if it's manufacturing, it's only going to have these three types. There's just no other type possible. The first one is direct materials. Now, this is the raw materials that companies buy to use in making their products, in processing them. Number two is direct labor. This is the labor they apply. It can be machine, if it's a computerized environment. It can be machine hours, otherwise it can be manual labor in terms of assembly lines and clothing operations. And the third one is manufacturing overhead, which is the most complex out of the three. It's pretty basic to measure direct materials. You can just take a look at your purchase orders that you've placed and find out how many raw materials you bought, how much you used in the period. You can also find out direct labor by looking at how many employees filled out the time tickets in a relevant time period, how much you paid. But this is a bit vague. What is overhead? Now, before I get into overhead, you'll see that I use direct materials and direct labors, the word direct. Well, the reason we use direct is because it can be traced directly. You can go and take a look in a product of how much raw materials you have used. You can directly trace a raw material in a product. You can also trace the labor directly. You can find out which set of workers worked on which set of products. Now, manufacturing overhead deals with the indirect things. Things that cannot be traced, which are essential to the operation of the manufacturing business, but they can't be traced. Either they can't be traced, or either it's not cost efficient or convenient to do so. For example, it's the little things. For example, there's a factory and you're manufacturing 5 different products in it, and you pay the utilities bill, the electricity bill. Well, how can you tell how much electricity each product used? How much of the bill is because of this product, how much of the bill is because of this product and this one? Even more vague, what about property taxes? If you have a factory, you're going to pay property taxes on that. How can you ascertain how much of the overhead is because of a specific product? Well, you can, even if you try really hard and you're really smart, but there's just no point in doing it. All the products are essential, and all of them generate business, and all of them are responsible for a specific set of costs. That's overhead. So it includes utilities of the factory, depreciation expenses, property taxes. It also includes the little things like the indirect materials that you use. For example, if you're making a car, how many wires you use in every car. You can't really trace it, so you will just combine the cost of all that you use in a month together and put it in overhead. Indirect labor is also part of overhead. Indirect labor would be a supervisor who's not directly working on the products, but he's supervising the people who are working on the products. So he's essential to the operations of the manufacturing, but he's not actually making the products. He's not working on the products directly. So that would be indirect labor. A supervisor who's responsible for overseeing the workers on the assembly line. That's overhead. So these are manufacturing costs. Again, only three types: direct materials, direct labor, and manufacturing overhead. No other type is possible, I believe. The second, non-manufacturing cost. Now, these are things which are, of course, as the name suggests, are not related to the manufacturing. These are selling and administrative costs, selling expenses of commission, advertising. All those expensive and non-manufacturing. You do not incur these costs to make the product. You incur them to sell the product or manage the product. So, non-manufacturing. Administrative cost. Departments which are used for support, usually the function served by head office of a manufacturing business. The salary of a CEO, that's non-manufacturing. Salary of VPs and any other staff which are there for administration or support of the manufacturing operations, those are non-manufacturing. So selling and administrative, those are the main two types. And for the purpose of this course, I think you will keep it at these two for non-manufacturing. Now, over here, all these costs are manufacturing, and because you can incur them to make the product, so basic rule of accounting, you can capitalize them. Or when I say capitalize, I mean you can include them in part of the product. So if I spend $5 on making one product, and that includes all of this for the sake of convenience. Let's say I spend $5 on making a product. If I was to account for that product in terms of accounting, I would write inventory and let's say $2 of direct materials spent, $2 of direct labor, $1 manufacturing overhead, and I would put that $5 cost in inventory, right? Because I have that inventory and I'm going to sell it now, but I still have it. So if I put it in inventory, it's on my balance sheet. So I've capitalized it. I haven't expensed it on the income statement. So it's a product cost. All the product costs are inventoriable costs. They go to the balance sheet when you manufacture them, and when you're done with them, the finished goods is a sub-ledger of inventory. For the purpose of 2510, you will have sub-ledgers of inventory. In 2500, you would just have one inventory account because you usually had reselling operations or merchandising operations where you would just buy the goods and then sell them again. If you're manufacturing the goods, well, you would have sub-ledgers of inventory. You would have raw materials, you would have work in process, and you would have finished goods. So some of your inventory is in raw materials form. They're just sitting there, you're not working on them, you just have them because you're going to work on them later and make products. Work in process are raw materials which you are working on, but they're not finished yet. And then you have finished goods. Finished goods are done and ready to be sold, but not sold yet. So all these are sub-ledgers of inventory. In each case, they're part of the balance sheet. That's why they call them product cost or inventoriable cost. For non-manufacturing costs, selling and administrative, these are called period cost. The reason being, you expense them in the period that you incur them. So if this year or this month I paid a utilities bill, I will expense it on my income statement right away. It doesn't go in my balance sheet, I cannot capitalize it. Selling and administrative, any non-manufacturing, they cannot be capitalized. You expense them in the period that you incur them. That's it. Nope.